Hello and good weekend. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Sunday, the 28th of February. All right, guys, once again, I'm going to focus on the top two assets here. If we look at our watch list, everything is pretty much red. So in this case, what we do is we focus on really the top two assets, see what they're doing, and identify areas of value that we can trade against. The main three things that we're using right now is fib retracements, we're using volume profile, and we're using swing tests. To me, the most important of these three is always the price, and that's the swing test at about 42,000. I do have a limit order sitting out at 42,000 on Coinbase at this point. So I'm looking out there at Coinbase and waiting on the 42,000 level to be hit so that I can be taken into the trade with a specific amount of capital that I'd like to add to my position with. So we're 7 days into this move, and so far we're down 24%. If we compare this versus the previous move that we had back here at the beginning of the year, this was obviously took a little bit longer for this to finally realize and settle out the bottom. And that was good for 31% of a haircut from the top, which by any other measure of a market is truly a bear market. But we all know that crypto moves a heck of a lot more than that. So this is just a standard correction that we're seeing. Now, if we extrapolate that out from the recent highs, the 31% haircut would bring us down to almost exactly 40K, which is right at the 61.8% retracement. So that to me is probably the most conservative way that you could possibly play this with any kind of structure, is to say, all right, we're going to have a 31% haircut from the top. And if so, that's going to come down to the confluence of not only the last measured move, or in this case, the average swing to the downside, and the 61.8% retracement. So there is an area of confluence down here, and it's probably the most conservative one that we have at this point. If that's still too aggressive for you, what you can do is you can start to draw trend lines in this case and look for the test of that trend line all over again. In this case, if we set up that trend line, it's going to come in around the same place as the 61.8% retracement, about 40,000 by the time it would set up a lower high and wander down in that area. So as you can see, I'm kind of splitting the difference here. Again, my limit order sitting at 42,000 is on the swing test, and it's sort of in between where the price is currently right now, today on Sunday morning, and where we might see, I'd say, a more conservative case level of pullback. So trading is all about compromise, right? If you set up the most conservative possible setup here, you'll get a better entry, but you might not get an entry. And this is what we saw in this particular swing to the upside, is that we only had about a 50% pullback on here. Those that were setting up for something more conservative or a retest of 20,000 on the breakout were left high and dry. Now, there's one more thing that I can do, which is a little bit more conservative than just setting out a limit order and taking myself into the trade, which would be selling a put. Now, I could sell a put at 42,000, or in this case, it actually at 40,000. But as we'll see, it's not paying a whole lot right now. So what I might consider doing, and we can do this live here, is to enter at 45,000. So sell the 45,000 put, which would account for if the price just rockets higher from here. But there is something I can do to put a little bit more juice into the trade. Here's my interface out at Ledger X, and normally I go for like the back month or an April fill at this point, but honestly, for the March options, which are about a month out, they're still paying a pretty good credit for this. So what I would consider doing is selling the $45,000 put where the price is just about right now. And in fact, those options would actually be slightly in the money. But that is where you're going to find the majority of the extrinsic value, or the highest bump in extrinsic value or time value, whatever you want to call it. Normally, what you're going to do is most people are going to come along and just enter the bid price, and then they'll be immediately filled. That's not what you want to do. What I normally talk about is finding a midpoint entry into here, and saying halfway in between 3,000 and 4,800 would probably be somewhere in the order of 3,900. So that's what I would normally do on something that's out of the money, is set up a midpoint price and try to get a fill right then and there. Now, what I'm going to do is something a little bit more aggressive, and this is to enter the order at the offer price or the asking price. So I'm going to try to sell at $48.50. So I'm going to be selling the $45,000 put at the asking price. So I should not get a fill unless the price actually keeps going just a little bit lower and then fills me probably somewhere near the midpoint. So you can see I've got about $500 in this account, and what I'm going to do, I can only sell one contract of this. Things have gotten to be a little bit more expensive. So what I'm going to do is just go to the order entry in this area, one contract, and I'm going to set the price right up here. So I'm going to click on $48.50 in this case, and then I'm going to click sell. So one contract, $48.50, premium collected would be $48.50 in this case, since it's only one contract. And that's close to an 11% return for doing nothing. Now, if the price goes higher from here into expiration in March, then I will not be assigned. If the price goes lower, then I'll be buying one contract or 0.01 BTC at a price level of 45,000. But actually it's less than that because I'm being paid for that pullback. So the actual break-even price is going to be less than 45,000. So I'm going to confirm this sell order. Once I got everything in here, I'm going to go ahead and do it. And there we go. There's a check mark. Now, unlikely for me to be filled at this point. So price is going to have to come down, but you just never know, because somebody might hit the sell position on their existing long entry and hit the wrong button, and then boom, I'm filled at a very nice price. So in effect, what I'm doing is becoming a virtual market maker out here. Now, worst case scenario is that the price just turns around and does one of these deals and leaves me high and dry, not only on the 42,000 limit entry, but also I don't get filled on the short puts. I don't think that's going to happen, because these things, you can see how long this one took to resolve, and we might get a couple more waves to the downside before this thing is finally over. Again, more conservative way is to look at this is that maybe eventually this is going to bottom out near 40,000. Now, if we do get a bounce up from here, I'm probably going to have to reposition for a later. I'm not going to get filled on the option, and I'm going to have to push this out to probably the April series and then wait for the next pullback here. So again, just to summarize, what I'm trying to do is trying to increase my stake in BTC, but do so at the very best advantage that I could possibly work. Now let's go to Ethereum, and really the deal here is a little bit simpler. We're going for this area here, and what we're using is kind of the confluence of not only the volume profile, so there's a high volume node at 1200, as well as the fib retracement here at about 1300, which is going to come into play. Kind of sloppy. So if anything, if you're looking to increase your stake in Ethereum, probably an entry at about 1200 seems to be the way to go. Now the swing test has already been violated from here. This is a kind of a sloppy swing test. It's not a very clean one like it was with Bitcoin at 42,000. So no clean swing test here. There is the top of the pattern, which is about 1,500, but this is already given away. So to me, these levels down here, again, no different from what we talked about last week. Probably 12 to 1,300 is the entry point for Ethereum, increasing your stake. Not much point talking about just about anything else here. Even with BTC going down today, we're also seeing the altcoins heading down for the most part. So just about nothing is escaping scrutiny for today. And again, this is just another corrective pattern. I do not believe this is the beginning of the end or the end of the beginning or anything like that. This is just until the market shows us a transition to a downtrend, which it's not, then we'll still continue to prosecute the upside. That is it for this weekend's report. Thanks for listening, folks. We'll see you on Monday.